Hey everybody, it's Kim Crumpus with the Price Action Traders Institute, here today to talk about two big trades that were happening today, Tuesday, September 7th, a day after Labor Day. So welcome back if you took some time off for the holiday. And New York session trading today was really great. But I'm just going to talk about two trades that are really worthwhile to at least examine. And before I begin, though, I just want to remind everybody that trading, of course, is very risky, and there are no guarantees that you can do what you are shown how to do or taught how to do. It's up to you to implement, to execute, and to trade to your best. So let's go ahead. We're going to talk about the dollar yen and the dollar CAD. All right, let's go out to the charts. All right, so what we're looking at is the dollar yen, and I have pulled my trades onto the screen so you can see exactly what I took and how I traded it. Remember, if you don't have a trade plan or a method, you need to have a solid method that you rely on, that you can use, that is trustworthy, that you know that after a series of trades, it will produce for you, then you can trade like this very simply. If you don't have a method, if you're all over the place using indicators and the latest robot and the latest whiz-bang charts, you are never going to become a good trader. You have to have consistency. You have to be able to repeat the behavior even in the face of losses. Today, though, again, September 7th, day after Labor Day here in the US, and the markets were on fire. So if we just look at the dollar yen, you can see, just looking at the overnight price action, this pair was in a beautiful clear directional move long overnight price action. This is 5 a.m. California, 8 a.m. in New York. This is when we start stalking the market for trades. This was the first yellow line. You can see I executed this trade here. I went long on this yellow line using a 10 pip stop and was taken out. I moved my protective stop up here and was actually, after it had accelerated up like this, I moved it down here and you can see it was taken out. So this first trade booked 15 pips. All right, so let's go ahead and remove this so you can see clearly what I'm talking about. So after that trade was hit, the market was still moving, looking across the board, which I suggest every trader do when they're still looking at the market and it's still early enough. If you didn't get this trade and you were in the trade planning session, you would have been right around here. This was the time that the trade planning session began, and the market had already lifted off. You could have gotten in right here on this yellow line. Let me draw that in so you know exactly what I'm talking about right here. All right, and let's see, would you have been stopped out if you took that? And the answer is no, you would have been in this trade. All right, so the early entry, though, gave you a nice cushion of what, about 13 pips. Okay, so let's say you traded just like I did. You caught this yellow line, you used a protective stop, maybe you got out up here, I don't know. And then once that trade closed, I got back in here below the yellow line. You can see the entry right here. And I ended up punching out because it was starting to get late in the day for another 15 pips. So this trade alone, I was able to book 30 pips. No losses. So on a 10 pip loss, 10 pip risk, I got 3-1 on my trade, which is phenomenal, right? We're shooting for at least 1.5 to 1, but if you can double that with 3-1, you're doing great. All right, let's move on to the next trade, and that is on the dollar CAD. So let's go ahead and go over to that chart. All right, so you're looking at the live chart of the dollar CAD, and just looking at the price action overnight, you can see that this pair was in a beautiful clear directional move long, nice stair-stepping price action. Again, this is 5 a.m. Pacific, 8 a.m. New York. It's when New York session traders begin looking at the market and stalking for trades. This was the first yellow line right in here. I took it and I was stopped out for a -10 right here. So what happened then, I was able to look for a re-entry. And since the order was at right here at 92, I was able to get into a re-entry up at 0.0 after this stop hit, right? So the stop hits here, -10, and then price swings around like we like to see it do, swings around, comes up, and I'm able to get into the re-entry at 0.0. And this one hit my protective stop right here for plus 20. So you can see I moved my protective stop right there, hit me for plus 20, and I got right back in the market. Why? Because these pullbacks weren't that deep and the market was still moving across the board. And on this second yellow line, which was actually below the yellow line just ever so slightly, this trade went all the way up to target, up at the 50 for 30 pips. So on this trade, between this, and the loss, I netted 40 pips. And again, using a 10 pip stop on this yielded what? 4-1. Okay, so great risk to reward on these trades, both of these trades on the dollar yen. But let's say you didn't catch this. Let's say you missed this entry and you got in here, maybe. If you got in here on a yellow line, would that have been stopped out? Let's see. This is when we start the New York trade planning session. So the first yellow line was here. And the answer would have been yes, you would have been stopped out. All right, so you could have gotten in, though, on a re-entry, which would have been brilliant to recapture that loss. All right, so dollar CAD, clear directional move, and 4-1 risk to reward. What a great outcome. These were two big trades today, and they yielded great results. Again, let me just remind you, you have to have a plan. So you have to have a plan. But before you can have a plan, what do you have to have? A method. And you have to have a method that's been proven. In other words, it's been used for years by other traders who are successfully trading it before you can come up with a plan, and a plan that you feel comfortable executing on. And you know exactly what to do. So every time price does something, your plan says to do this. If this, then that. And if you don't have that type of plan, and if you're looking for some kind of indicator, cross on a MACD or a Bollinger Band, anything like that, you're wasting your time. I'm telling you, on Forex, I don't know about how it works in the stock market, but it's a waste of time and a waste of money. So I hope this helps you see the market a little clearer and find out what you can do. All right, have a great day. Thanks for listening, and subscribe if you're not subscribed to my videos. Thank you.